This surprise company made a deal with Midas. You know, that old Greek guy who turned everything to gold. Today his name is Amazon. Everything Amazon touches turns to gold, as you know. I'm actually going to talk about Amazon next week. Let's see if Amazon will help this company. Hi, this is Tim from Trading Strategy Guides. Okay, I know the suspense is killing you, but we'll talk about Amazon and their benefactor in a minute. But first, let me remind you that you can speed up this video by clicking the gear icon in the lower right and selecting a new speed. And stay around until the end to get the next trading maxim from the list. I told you Wednesday to watch Tesla and short it if it closed below the descending triangle right here. Well, the hugely negative earnings statement came out after the market on Wednesday. It pushed down there on huge volume right here. You can see this huge volume spike, and it looks like there's more downside. And in fact, if you actually took this trade on this close with huge volume, the way I was talking about, you would be up about $13 already. So if not, watch for a pop, even a retest of this 248.50 level, or up here at the bottom of the triangle, which is around 255. You know, the market's got to breathe, so you may get another opportunity to get into this. Yesterday, Halliburton attacked the bottom of this daily triangle right here. Like I talked about on Monday, it has popped below that today, but it's kind of wimpy volume here. Okay, so if we get sufficient volume, and it doesn't, it's kind of late in the day now. It's about it's approaching 2 o'clock New York time, so it's probably too late to see any significant volume on this. So it's probably going to be next week. But as soon as we get a close below this triangle with sufficient volume, that's the time to go short. Make sure you got volume that's at least near the average up in here somewhere. This one would have been sufficient. And now it's time for the big reveal of the surprise company. Cue the drum roll. Yes, folks, it's Kohl's Corporation. It trades on the New York Stock Exchange as KSS, and it's a component of the S&P 500 index. Kohl's started out as a grocery store in Milwaukee, Wisconsin in 1962. It eventually turned into a department store, and then it went public in 1992. With 1,158 locations, it's now the largest retail department store chain in the United States, surpassing JCPenney in 2013. So let's take a look at the comparison between those two. Here's a monthly chart with JCPenney plotted on the top and Kohl's plotted on the bottom here. As you can see, Kohl's has been pretty solid for the last 10 years. They've had some dips and all, but they keep pulling back up, while Penny's has just been in a steady decline, and it's got a reduced volatility, and it's just not looking too good. So what's the news about Amazon anyway? This week, Kohl's and Amazon announced a full partnership, one that's been in testing for a couple of years. Starting this July, Kohl's stores will be accepting Amazon returns, which will provide Amazon with a few sticks and bricks locations by hoping to boost Kohl's walk-in traffic. And as you know, everything Amazon does turns to gold. I'll be talking more about that in Monday's video. So this plan has been in the works since late 2017. And this is earnest research right here that has been participating in the plan, in the study, and it shows the percentage of returns coming from the Chicago area where the pilot program started. And as you can see, it increased dramatically. And this next earnest research chart here shows a corresponding growth in Kohl's revenue starting the end of 2017. Elephant Analytics believes this will help Kohl's sales growth and increases the estimated value to around $81.40 per share. And the Hustle pointed out that Kohl's shares surged nearly 10% on this news. And just as an aside, Kohl's is partnering with other companies like grocery store chain Aldi and Globo Gym Planet Fitness in an attempt to drive more traffic to their stores. So is Amazon's golden touch going to benefit Kohl's? You probably already know that I firmly believe that the chart tells us the whole story. So let's take a look at the chart. As you can see right here, the weekly chart is showing this head and shoulders pattern right here, which is typically a bearish pattern. It's got the nice run up, which is always important in patterns. The left shoulder, the head, and the right shoulder. And typically this pattern will break down, but it doesn't officially trigger until price drops below this neckline. This is a huge pattern right here, and it would require a stop loss of over 2,300 pips. So I'm not inclined to trade this one at all. But I want to keep this bearishness in mind when I drill down to the daily chart. On the daily, there's another bearish pattern, this wedge right here. Now, see, price popped up to the 61.8% Fibo right here, and dropped down like it was going to break out of this wedge right here until the news came out, and this was the day that the news came out, and price popped from here all the way up to here and then pushed on up and looked like it was about to break the top of the wedge. Okay, and it did that on huge volume. Then it settled back into the wedge right here, and for the last few days it's been closing within the wedge, and the volume has dropped off some. So, like I said, I believe that the news gets built into the charts, so I'm thinking traders are sort of over this Amazon news for now, and price is settling back into this wedge pattern. So I'm thinking short on a good close below the wedge as long as it's supported by above average volume. Okay, now it's your favorite time, trading maxim time. Tim's trading maxim number 28. Once you learn how not to lose, then winning becomes easier. Trading is not just about winning trades, it's also about not losing trades. One of my mentors says it this way: we win by not losing. You can win $1,000 in a day, then lose $900, and that's exactly the same as just initially winning $100. You can double your take for that day by only losing $800 without winning a cent more. I hope that makes sense. So, while you're learning to win, also concentrate on learning not to lose. Remember to watch Kohl's and sell on a close below the pattern if there is sufficient volume supporting the move. And also, if you don't have time to watch charts, Trading Strategy Guides has a free signal service based on the Strike Trader Elite strategy. I'll put a link below the video here for more information. As always, thanks for watching and thanks for subscribing. If this video has helped you, please click the thumbs up below. Have a great weekend, and I'll see you next week.